Hello, everybody. Welcome to episode 6 of the Canadian Real Estate Homefront podcast.
Yeah, I'm Cortez Veneri,
And I am Brooke Hicks.
and we are just going to hop right into this. Lots to talk about this week.
Let's go right
into it.
I listen to too many podcasts where they do this large intro, like and subscribe and all that. And I just don't want to be like that. So
we'll do that at the end.
Fine.
All right, first topic on the docket. We got the U.S. Federal Reserve. They just raised their overnight rate by 25 basis points. Is Canada next to raise?
So that's been a huge topic, and even direct questions to me is, what does this mean for Canadians? And usually the Bank of Canada kind of follows pretty closely what the Fed does because, again, we don't want our dollar to be too far away from the US dollar, as the US is our largest trading partner.
Yep.
So if we're bringing in all of these goods from our largest trading partner and our dollar is too far below, that's going to cause its own little wave of inflation, right?
Right.
So we like to usually follow behind. However, I think we're still on pause. What's your take on it?
I think so too. I think that the Federal Reserve is going to probably stop here and kind of reevaluate because, I mean, there has been banking failures.
Right.
So I think that this is probably the last one and done. Inflation has come down quite a bit in Canada too.
Now?
Our overnight rate?
No, our inflation
I think it was in 4.1. I think it was
5.1. I think
was it 5.1.
It was 5.1.
5.1. Sorry,
Yeah.
I might have misquoted that.
Maybe it was 4.1.
Yeah. Off the top of my head, I know it just always changes so fast. So I think that it's been good news, and I think it's been a good thing that inflation has come down the way it has. So I still think Canada will pause. The only thing that kind of gives me a little bit of worry is how hot the real estate market has been. So when they're looking at numbers, and I think that they'll be looking at Treb's numbers too, because they're probably going to look at real estate where it's the biggest. Right. And most expensive. So I could see them looking at Treb's numbers and just being like, wow, we have not slowed the housing market down at all, which is, I think, was a major part of a lot of these rate hikes as well, was kind of slowing spending. And we've just seen this, month over month
4
increase.
months in a row.
Yeah. So I don't know. Maybe rate hikes aren't completely out of the question, but I think for now, I still think it's going to be a conditional pause.
I think we're going to be on pause until the end of the year. I actually think that the next change will be downward. I don't think we're going up anymore. I think we're going to kind of remain status quo over the summer, maybe into the fall. That's my prediction because, again, inflation is stabilizing. They don't really need to bring up the rates again, other than just the housing market. And we have to remember that the housing market is only one sector of the economy.
For sure.
Right? So to hurt such other big sectors of the economy just because this one is out of whack, I don't think that it makes much sense. I think that rather than raising the rate higher to cool down the market even more, there needs to be other solutions, like going back to supply and demand. That's the piece we're missing. It's not necessarily a direct relation to rates. It's high rates and high sales and high prices. So that is ironic in a sense that it doesn't necessarily mean that the rates have really cooled it. It's happening again.
Yeah.
So to hurt the other parts of the economy, for this one sector where supply is our issue, I don't necessarily see them doing that, but obviously things
can change. Yeah. Every week they kind of change for sure. So
I think there's a little bit more economic, I don't want to say certainty, but the opposite of economic uncertainty.
Right.
Buyers are coming off the sidelines, even with these high rates. And I think it's because if you're a buyer and you're kind of approaching the housing market, if you think that within the 3-month closing period or 2-month closing period, your rate is going to be different, or things could change the house prices significantly, even if you go with a fixed rate, that leaves people to be like, I'm not confident enough. Whereas now, since we're on this conditional pause, even though they're high, it's like, okay, at least I know what I'm getting into.
Right. Yeah, I agree with that.
So,
yeah, I think too, even like we've talked about before, even if, we do see some rate cuts in the future, they're going to be small. I think it'll be 25 basis points sort of thing. Unless, I guess another option is that if a lot more banks start failing and we see a lot of, contagion within the financial markets, they'll be forced to drop rates, and they might be forced to drop rates faster than they want. So yeah, you're kind of playing this tug and war with inflation and breaking the economy. So, but
Right.
I guess we'll see. I guess they felt the merit in the States to raise another 25 basis points. But again, their real estate market isn't as sensitive as ours.
It's a lot different.
It's a
There's
lot different.
way more houses and
Yeah.
way more people.
Way more cities, less variable rates. That's for sure.
Yeah.
Most people take these 30-year fixed rates
Right.
because they have so much more competition within their banking system. So
Yeah.
yeah, I don't think it's going to be quite as detrimental over there as kind of we saw here with everyone just getting crushed by their variable rate. And still today, they're,
Yeah.
underwater, probably just hanging on.
Right. And
So-
I still think we're going to see, inventories picking up. I think we're going to see more and more inventory picking up
Mhm.
with these renewals, even from 5 years ago, 3 years ago, people coming up to their term renewals. I think people with their second properties that they bought even, 2 years ago plus, that they got a 2% interest rate fixed, whatever it is, had some cash flow. Now renewing at a 5.5 or whatever it is, not having that cash flow anymore, but maybe having a little bit of equity, kind of getting rid of that second property, especially with even the cost of things being so high. So I think more investor properties are coming to the market.
Mhm. Yeah, more tenanted properties.
More tenanted
Yeah,
properties.
you're
for
probably seeing a
sure.
few of those in Hamilton.
Yeah, I have one come in and they're locked into a lease and it's just, variable rate. And now he's majorly negative. And, it's
can't hang on.
at least though, you can sell them because there's not enough inventory. So
Right.
you're not going to default on your mortgage. You can just sell. Now, how much of a loss you take is the question.
Yeah.
Prices are still down, however much they've
From the
crept
peak.
back
Yeah,
up.
yeah.
But yeah, no, that's definitely what we're seeing. More listings coming, which is a good thing. Again, it comes back to supply. But, I read a lot to do with how the insolvency rate is expected to change and go up from here. I don't know if you have, your thoughts on
The insolvency. Yeah, I still look at a record low. Like every time I kind of see people dive into it and I see articles. So it is, it's still at a record low, which is pretty crazy to think about in this high interest rate environment. So I guess Canadians just have a lot of backing.
and a lot of equity too.
Yeah, a lot of
is
equity.
the
Yeah,
thing.
that's
If
fair.
you're not already in the market, it's tough to get in the market, especially if you're by yourself to qualify for these rates or even buy a house.
Yeah.
But if you're already in the market and didn't buy at the peak of the market on a very low variable rate, that's just a small percentage of people that are suffering.
Right.
There's a lot of Canadians that have a lot of equity in their house.
Yeah. 100%.
Essentially.
Yeah. Tons of equity.
So, the foreclosures and power of sales, I don't know if we're going to
I don't know if we're going to get there, but yeah, we'll see.
I don't know.
Yeah.
So I heard too that they're introducing this code of conduct for people that can't pay their mortgage. Did you hear about that?
No.
So it's this code of conduct of how Canadian regulated banks, so A lenders like TD, CIBC, BMO, and all those, how they need to handle people that are defaulting on their mortgage
Right.
that maybe don't qualify for renewal. So like we talked about a couple episodes back is the push of the amortization schedule.
Right.
And so they're coming out with, it's called a code of conduct, where how to handle mortgage defaulters and what they're going to do if there's a big, huge uptick in them.
Kind of to help them out.
To help them out, right?
Keep them in their home, not let them default.
Right. So I think
That's kind of been the story of
yeah.
of this year almost, is like, why haven't we seen these forced sellers? Has kind of been like, because the banks are working with these people.
Right.
The only market that I think we'll see contagion and forced selling is obviously if you took a private mortgage, because those guys are willing to risk it. They're not willing to work with people.
Private mortgage lenders can pull the mortgage at any time, and that's the thing.
They're
Or
meant
they
to
don't-
be short term, right? Yeah. So interesting.
Yeah.
I guess we'll monitor these rate hikes and see what
and
happens,
we'll
because
see what this code of
yeah,
conduct.
sooner or later it's either coming down or it's going up.
Well, we were talking about the people that locked into a fixed variable, right?
Yeah.
So a fixed variable rate is when you're on a variable rate, but you have a fixed payment.
Yeah.
So I'm going to pay $3,000 every month, regardless of how much it goes down or up,
Yeah.
right?
Just more goes to interest.
Which more goes to interest or more goes to principal, depending on the overnight rate. But then your trigger rate is when you're paying 100% interest.
Yeah. And then that's not allowed.
Yeah, that's not allowed.
You
So
got to pay some sort of principal down.
they have to push your amortization. So now all of a sudden your 25-year mortgage now becomes a 30-year mortgage because all of that principal none has been paid down. So it gets added to the end
Yeah.
and come up to renewal. You're not allowed to sign a 30-year amortization. You have to bring yourself back down to that 25-year.
Right.
And then all of a sudden your payment that you're used to jumps up even more, higher rate, and you're bringing your amortization schedule down. So now your payment changes drastically.
Yeah.
So there's some changes that they're talking about, this code of conduct, but it's not really introduced yet. So we'll see. And it's just a way to handle people in this situation.
100%. All right. So, we were talking about supply here too. So there's a guy, I believe his name is David Rosenberg, and he's an economist. He's very well respected. I didn't really know too much about him, but I was listening to a podcast, and he was a big proponent during the 2008 subprime mortgage loss in the States. And he talked a lot about it. So he wrote a piece, and it was Trudeau's immigration policy worsens housing affordability crisis. And he had a nice quote here. So, a nation where folks in their 30s are crowded out of the housing market because of an elongated period of excess home price inflation that is a result of the federal government policy is not a very happy nation. He basically went on to say, this will all come out in the wash in the next election. And if I were in opposition, this is the card that I would be playing.
Interesting. Well, it's so true. I mean, even the last federal budget announcement, there wasn't much to do with supply. There was the bank account for first-time buyers. There wasn't much on how to increase supply. They've now mentioned this home building accelerator program. That's a $4 billion budgeted program that essentially will add 100,000 new homes on top of what they plan to already build in the next 7 years, which I don't see as
moving the needle.
100,000 homes in 7 years as an accelerator program that costs $4 billion, which equals $40,000 a house. What does that mean? That doesn't build you a house. So where's that money going? Is it?
It's honestly a mess, right? Like, you have this huge demand supply imbalance, and you have 500,000 newcomers coming in every year. Like, who's talking about this? Like, don't we have a housing minister to say, hey, we might need to put the brakes on how many immigrants we're letting in, because there's people here that can't even afford a house right now. So what are we doing opening up the floodgates? And again, it has nothing to do with being against immigration, because we're for immigration. Like, it grows, but if you don't have a housing plan, you can't just be letting more people in who all need a house.
Right. And Trudeau is saying that he's bringing in specialized immigrants because we need more people to build, because we lack enough workers right now to even build the houses. What I've heard the opposition say in the next election is he's going to cut a lot of, the output and where the money is going, because it needs to be allocated to supply, and it needs to.
Yeah.
So even adding a ton of non-used government buildings, something like 6,000 buildings that are not really used,
sell them off and
put them into the residential market.
That's Pierre Poilievre, right? You're talking about? Yeah.
Cut 20, I think he said billion, it might have been million, in consulting fees.
Yeah.
The carbon tax was raised again April 1st. So the carbon tax, as much as, okay, great, but if you're taxing energy, you're taxing everything, you're kind of, you can be on either end of that one. I won't.
You can get on either end of that one.
But yeah, so even back to the budget, not much was.
Yeah, not much was said. Yeah, like we talked about this before. I wonder if I feel like a year ago you probably couldn't talk about us immigrating too many people. Like, I feel like you just get a negative spin on it, and now people are just looking at housing and being like, yeah, we do not have a plan. Like, this is nothing to do with anything other than, like, this is not going to be feasible. This is only going to get worse if we keep allowing this and building at the rate that we're building at. So
because supply is just so low in comparison to demand, what I think, the pressure has been from where Trudeau is to, or even like banks raising rate, they want to decrease demand. It's like, put that energy into increasing supply. It's all about demand, downward pressure. And okay, because demand needs to go down if we want inflation to go down, because as demand is up, even jobs and everything will start to be inflationary.
Yeah.
So demand needs to be cooled for sure. But again, everything we talk about comes down to
supply
and demand.
100%.
We learned it in preschool.
Yeah, like the first economics 101. So I do wonder though, I think it's a good, like what this guy said, this Rosenberg guy, he said that, it'll be, the platform that I guess, probably the conservatives are going to be giving the liberals a run for their money in the next election. Like you want to talk to those young folks, right? Like that's got to be your message almost, because you got to get them out there to vote.
Right.
And I think that a lot of young people who listen to this podcast too are thinking the same thing. Like how are we going to afford a house? Like it's this big underlying question.
And so, I like what Pierre has to say, honestly. I do. I like what he has, like his points, they make sense.
Yeah.
However, if I'm a young person and I want to buy my first house, it's like, okay, everything you're saying makes sense. Add more units, great. Cut costs that has been spent by the government, great, all good. But give me a plan, right? Give me a plan. Lay it out for me. And so the one thing I will say that I like that's in effect right now, I'm not going to get into it too much here, but if anybody does want information on these, they're readily available for people. The government programs, use the people that'll match your down payment. The government will give you 10% if you have 10%. They'll give you 5 if you have 5 to buy your first house.
Right.
Yes, they're an equity holder, but who can get in?
Yeah, it's better than nothing.
It's better than nothing.
It's interesting. I even as a realtor, I've never really heard too much about those programs.
There's 4 government programs, and there's even some other companies that'll match your down payment. You have to give them a share of your equity when you sell, but get in the market. Great. Sell in 3 years, pay them off, or just rent for 3 years.
Yeah.
So I am a supporter of these programs that are in place. I don't think enough people talk about them. How am I going to buy a house? How am I going to buy a house? Well, buy a house using the government's help, give them a share of your house. No, I don't want to do that. So maybe you actually have to look at yourself too. Well, there is an option. There's a lot of things that the current government can't directly control. Prices are going up again because supply is low. It's not going to be an overnight fix.
Yeah.
So if you want to buy a house now, there are programs that can help you, especially with the down payment, which is one of the hardest parts.
Yeah. It is incredibly hard.
So maybe we'll talk more about in depth on which ones we
like, we should. Yeah.
I find people are more like, they don't want the government's help. They don't want the help.
Well, I feel like I've never even heard of them, so I feel like they're almost
not talked about.
They're almost a failure then. If we're not we're not talking about
maybe
like
they don't want to do it, but I think it's a good program, like matching people's down payment to get into their first house. Great, you get a percentage of your equity or pay it back within a certain amount of years.
Right.
But these first-time savings accounts aren't really doing much. If you match the down payment, you're actually helping people.
Yeah, you speed up that process.
Cut the costs of this government consulting. Cut the, all this raises on energy tax. Cut those and put it in homeowners' pockets that need help, and then obviously give a time period to pay it back or a share in equity. Sure. If you can't do it on your own, there is no harm in getting help. And
no harm, no foul.
So that's the one thing I do like.
Yeah. That's a good one. Yeah, we'll definitely try and touch upon that going forward.
Yeah.
Like we'll do an episode on those ones, so maybe it can help some people try and get into the market, which would be cool. Yeah, that'd be awesome. All right, next topic here. This one's not really related that much to real estate, but I still think it kind of is. So food bank usage continues to rise at an alarming rate in Ontario cities. So this is probably not just Ontario, but it's probably, around Canada. But in March of 2023, the Daily Bread Food Bank reported that a total of 270,000 visitors for the month, the highest in history in over 4 decades. Rerunning back to pre-pandemic, the corresponding number was 65,000. So before the pandemic, 65,000 people visited a food bank. We're in May now, so a couple months ago in March, 270,000 people visited a food bank. Today, 1 in 3 people at food banks are first-time visitors.
Wow.
Pretty wild, eh?
Yeah, and it's sad. And, I go to the grocery store, and I am blown away at the cost of food still. So as much as, yes, inflation is kind of coming down, food inflation is still pretty up there.
Yeah.
And I think it relates back to, we have a tight labor market too.
We do.
Right? And so people are still spending, right? They're still paying those prices for food. And I don't know if we're going to see huge decreases in food inflation.
Food inflation, yeah, we might not.
It's crazy how expensive grocery bills are. So that, it makes me sad, but I see why. And part of it, we have to look at the food we're bringing in from other countries. Okay, well, if our dollar. That's why we want to stay close to the Fed. But
Yeah.
there's Canada's, service price inflation and our corporate pricing is very high. And so that needs to come down for food prices.
Yeah,
come
it
down.
is true. And just to touch more on this article, they kind of had 4 different factors as to why this is happening. So factor number 1 was inflationary impacts. The government's rampant spending in the years leading up to and during COVID-19 have been an early warning sign. So they talked about programs such as CERB, and really just, spending a lot of money and putting fuel on the fire.
Mm-hmm.
Number 2 was stagnated wage growth. Number 3 was rental market increases.
That's probably a huge one.
Yeah. As the Bank of Canada raised its benchmark interest rate, mortgages have gone up. Home ownership became progressively more expensive through the course of 2022. And the last one was recent layoffs.
Yeah.
So those are the kind of the 4 factors they talked about.
Wow.
But yeah, there was someone in the article, just to finish up here. They talked about having a variable rate and how it went from $2,200 a month to $3,500 a month, and they had to start going to a food bank because they were like, well, it's the only way I can keep my house is to not buy food, and I can go to this food bank and I can get free food. So it's pretty heartbreaking.
What's crazy is that a lot of these people that are at the food bank are young professionals with a university degree.
Yeah.
It's not, I don't know if it's stigmatized. I don't, if you need to use food bank, all for it. I like that they have that in place because it is tough for people.
Yeah,
right? It is
absolutely.
A tough time for Canadians. I
Very
will be
tough.
first to admit it.
Yeah.
But yeah, it's not like they're not educated, and a lot of them, it was like a high percentage of people. It's young professionals, and
even taking on these student loans too, even, which is, some of them are outrageous, 30,000, 40,000 in debt. Especially if you're taking like a line of credit too, which some people had to take.
Totally. And I just think there needs to be a complete change from the traditional way of life. Essentially.
Yeah.
You get out of university, you get a job, you buy a house, you have a family, you live in that house until you downsize. Yeah. Your kids, right?
Yeah. I don't think our generation is going to have the same kind of trajectory that our parents had. I don't think, like you just said, go to school, get a good job, stay at that company for 30 years, pay your mortgage off, and then sell your house and retire, sort of thing. It's not going to be the same. The world has changed. Very much so. So it's, I don't know. I thought that was like not exactly like completely correlated to real estate, but it was.
But it is. Your cost of living has gone up so significantly that,
your housing costs $3,500 a month, when you factor in taxes and everything. Like, what percentage of your income are you spending on housing and, your car to get to work? What did CMHC say, that it should be 30-40% of your income? And now people are probably 60+% of their income is going towards housing, especially if you're renting, making minimum wage, definitely you're feeling these effects, so much to the point that we're seeing 270,000 people go to a food bank. That's, all of
1 month.
In March reported a total of 270,000 visits for the month. So it's like all of Oakville. I know Oakville's a wealthy town, but there's that many people in Oakville all going to a food bank. So
that is
pretty wild. Yeah, it's a lot of people. So even from the 65,000, it's scary. It's a lot of people. Yeah. So people are feeling the effects of inflation. They're feeling the effects of rising prices. Yeah. And, it's kind of a reflection of why the Bank of Canada is working so hard to bring down inflation.
Yeah. And so another thing too is that a lot of people are up in smoke about, what's going on right now, but it needed to happen. Inflation was 8%.
Yeah.
So as much as this sucks for everybody right now who's, been affected by the increases and everything.
Yeah.
Inflation having continued down that same trajectory was also unsustainable. So I don't envy the people that are making these policies and trying to balance the market at absolutely all, because no matter what, there's going to be people on either end. So I do not envy them, but this needs to happen. Like, monetary policy needs to be tight for demand to decrease, cut spending, it needs to happen. And eventually, and I think their goal, they're not out to hurt Canadians. They're essentially doing this for a reason, and it's to balance out, supply and demand a little bit, where this type of tight market, it doesn't need to happen. So I think it is a means to an end, and hopefully, we can see over the next coming years, as this was like a little blip and it didn't put too many people out of their homes, and it needs to happen, which is the sad thing. And
Yeah.
so it is so crappy, but what is the alternative after COVID? Look at where inflation was. What could we have done differently after a worldwide pandemic that was unforeseen?
Yeah, I think it's a direct result of inappropriate amount of spending.
Yeah, and so like I was saying, is in Sweden they don't see inflation, which I'm like, that's so interesting, and because they have their own dollar, the franc, so they put policies on their money where they didn't print.
Was it Sweden or Switzerland?
I think it was Sweden.
You sure?
Sweden has the franc.
Okay.
You're gonna call me.
You keep talking.
Anyway, so they didn't overprint money, and so I was basically an analogy to overprinting money is that if you have 5 phones and you have $10 in the marketplace, every phone would cost $2. Now you print more money, you have $20 in the marketplace, but still 5 phones, so you have an increased supply. Now those people will spend $4 per phone, right? There's more money in the marketplace, which causes inflation. So I think we did overprint money for sure. Is it Switzerland or Sweden?
It's going to be Switzerland because the Swiss.
It's Switzerland. No, it's
Swiss franc. It says what?
Are you sure?
Yeah, I'm pretty sure the Swedish krona is the currency.
Swedish krona or the Swiss franc? Sorry,
franc.
everybody.
Okay.
It is Switzerland.
Really?
I thought I read Sweden.
Well, no, I remember hearing a lot that the Swiss franc was, the Switzerland had like a 2% or less inflation rate during this whole thing because they didn't print money.
Switzerland didn't print money.
Yeah, like at a very vaguely.
They sound the same a little bit.
Switzerland,
the first 2 letters are the same. Anyways, ignore that.
Ignore what you said there,
but it is interesting to look at these other countries because they have the exact same supply chain as us. It's the same supply chain. So, bringing in goods from other countries, it's the same kind of thing we're doing. And
the America did the same thing, right? They spent a lot of money. They were sending checks. Like my uncle was like, he does really well for himself. And he was like, thank you, Biden. I just got, $5,000 in the $5,000 check in the mail. And, we kind of wonder why we had this crazy inflation. Well, it's not a direct correlation, but it's quite obvious that government spending done irresponsibly leads to high inflation.
Yeah. And, if say everything went a different way and, we didn't have CERB and all of these programs to help people and like all of these places where there was a ton of money allocated for, if we hadn't have done all that, what would have been the end cause or detriments of going that way? Like,
we'll never know.
We'll never know. Yeah. And would we have said, if you only just helped us more?
Yeah.
So last week I was very pessimistic. Now I'm like, okay, well, there's no solution. It's just,
you can't change it either. We can't go back in time. Yeah. How do we do better going forward?
How do we do better going forward?
Yeah.
And I think it's, more programs like what the government offers as matching your down payment and helping you, and tightening monetary policy to decrease demand and spending needs to happen to get back down to, that 2% rate, which is a sustainable rate.
Yeah.
It's sustainable once we get there.
Once we get there, 100%. Yeah.
So hopefully it happens sooner than later. So
this
is just a time that we tell our kids about.
Yeah, it's just this, sad story to read, which
story to read.
That's what it just felt like. It was like, oh my God, there's that many people struggling and probably not even talking about it because they're probably almost like, there's that embarrassment factor.
There is. And, but the other way wasn't sustainable.
No.
Either.
So here we are. Yeah. Anyways, moving on to something a little bit more affordable. So
okay.
Here's another topic. So there's a good article here. The most affordable Canadian markets for single income apartment buyers. So we did a few short videos on median incomes versus, housing prices in different provinces. Remember we did that one?
Yeah.
And so many people were trying to roast us. That's not right. That's not correct. That's only if there's 2 people and all these things. So here we are. I'm trying to make up for it and talk about if you're single. And here are some of the 5 most affordable for single income apartment buyers.
Oh, so last time we only did.
Well, it said the median income and everyone's like, where are you getting these numbers? And everyone's
Why, was it too high?
That's what they said. Yeah. There's no way it's that much here and stuff like that. So I don't know. That's what the article told
my
me.
My sister sent me that.
What? That article?
Sent me our video and said, really, it's this high in Toronto? It must be
Well, I don't
Median.
know. Yeah.
Actually, no, this is what it is. The median is just the
The
middle
middle
number
number.
when you organize them from lowest to highest.
There's probably more people living together than there are single people living alone, I would
Median
think.
household income.
Yeah.
We should take the mean, which is the average.
Yeah.
The median is the middle number. So there could be, it's kind of.
Yeah. It's a hard number to ever get right. So anyways, we're trying to make it better here. So here we are. Oh my God. So yeah, what does it say here? Single family apartment buyers are located in the prairie provinces. Meanwhile, the 5 least affordable are found in British Columbia and Ontario. Not a shocker there. With a benchmark apartment price of $183,000 and a median income after tax of $42,800, Edmonton was deemed the most affordable city for single income buyers. It would take just 2.6 months to save the $9,155 required for the minimum down payment. So I'm guessing that's the 5%. Regina followed with a single income buyers who make $42,400, needing to save for 2.9 months to afford $10,410 down payment, and the average apartment would cost $208,000.
Wow.
Yeah, and the last one here with the median income of $40K, it would take a single income buyer in Saskatoon 3.4 months to save $11,275 required for a down payment on an apartment, which costs $225,000.
Interesting.
So you're looking at, where is it? Saskatoon, Edmonton, and Regina. If you're single, those are 2 places you can buy an apartment for what it says relatively cheap. Don't roast me.
But you have to live in the prairies.
Yeah.
Which, I mean.
People do it. People love it. Yeah. So I thought that was interesting.
Yeah, that is interesting.
Yeah.
So how many months, I wonder, if a single income in Toronto, okay, I think it's a little higher.
Yeah.
I think, what would it be? Probably 70.
Oh my God. I think it was like, if you wanted to buy a house.
Yeah.
I think it was like 20 years or something crazy.
20 years.
Yeah. It was like a house
though.
It was a house. So like it was obviously not the same as the apartment, but it was something crazy like that. Like you would need to save for that long to do it. So it's like something insane, but we'll have to pull up that article another time.
I watched a TikTok yesterday, and it was basically someone saying, if you're a single person on a single income, don't buy a house.
Yeah.
Just give up.
Just give up. Yeah.
And so I'm like, okay, well, I don't hate renting either.
No, nothing wrong with it.
Right? If you're already invested in the market in other areas, cash flowing properties and, buying a single family home and paying a mortgage that you don't really have any stabilization as you do as properties that are under the rent control.
Right.
And then, how much it's supposed to, go up as a single family residence. And I don't hate renting. I just think getting in the market is good for long-term wealth building.
Yeah.
But
yeah, it's like a forced savings account. I think renting too, the only thing that you always worry about is if you do get kicked out of the home, right? Like say you're
having to find somewhere else.
If you've been renting for 5 years and you lock in this low rate and you're only paying 2% more per year in appreciation just to your landlord, and then all of a sudden they go, oh, I'm going to sell it.
Yeah.
And you're paying $2,000, then now you're looking at rental prices and they're $2,800 or
right.
The rental market has just moved so fast.
So in Oakville, along Kerr Street, which has been a transitionary neighborhood for a long time now, they're trying to take down these low-rise apartments and put up these bigger ones, I guess. So there's been renters that have basically been grandfathered in for 20 years. So now they're saying, we are going to offer you guys compensation to move out because we are selling the building essentially, or we're selling it to a developer to build a condo in its place. And a lot of these people have been used to, maybe on disability or whatever the case may be, but paying $800 a month. So they're saying their compensation to these people to get them out is 4 months rent.
That's it?
That's it. Which won't cover 1 month to them moving.
Where are you going to find something else? Yeah.
Right. So I'm wondering, it's actually, close to home, which is like, that's very sad. What are they going to do? Because number one, you're not going to qualify.
No.
If you're on,
no one's going to take you in.
No. And it's tough. And, if you're on disability or any of that, landlords should be okay with it. But I'm with an overheated rental market.
They're going to pick the best candidate who makes the most money.
Yeah,
and the best credit score.
It is sad. I see the salt of the earth people and, one's on disability and understandably so as to her situation. But it's tough to get a landlord to accept her application over somebody that just has full-time employment.
Yeah.
And so a lot of these people won't be approved to get another lease, even if they can afford it.
Yeah.
But for it to jump up from 800 to a comparable place going for 2,800 now, that is a shock to the system. And what do? Are they going to go to a homeless shelter? I mean, this is actually something that also needs to be talked about. Is we want to add more supply, great. So let's take down these short-term rental buildings where there can be, more density. But what do you do?
What do you do with all those people? Like how are they going to, like, what's the average price of a 1-bedroom even in Oakville right now? $2,500 a month.
2,500 probably. So Burlington, my condo will rent for about $2,500, and it's a 1-bed, 600 square foot condo.
Yeah, like how do you go from $800 a month to that? It's a shock.
It is a shock to the system.
Yeah, so that's.
I'm also seeing more applications come in from people that have the city helping with rent. And this is in Hamilton, Ontario specifically. So I've had 2 people rent basement apartments. And when looking at the application to my landlords, it is a basement apartment. So we're not going to see high income earners for the most part now. Either they're young or whatever the case may be, but the city actually pays half and they mail a check to the landlord direct. So it is more secure, but I'm thinking this is interesting. So the city is helping in some ways. One of them was a single mom, one of them leaving an abusive relationship, but I liked to see that there was help because
no, it's great to hear.
And then I'm like, listen, like it's guaranteed. I understand their situation, and she wouldn't be able to afford it on her own, no way, especially with a kid, but the city was helping her, and he gets a monthly check only for half. She has to come up with the other half.
Yeah, but still.
Yeah,
she still gets a place to live. And
right. So I don't know if maybe something like that needs to happen.
Yeah.
But then it's like, how do you, just because you were grandfathered in, do you get money?
How do you balance it out? Yeah. Anyways.
There's just too much.
So many moving parts.
Moving parts. It'll never be, you'll never please everyone.
You never will. So here we are. Anyways, anything else on your mind? Anything else going on?
I think that's it for me.
That's it for you? Yeah. I mean, in terms of the market, I'm just seeing some crazy prices. Not many price drops on stuff. It seems more like multiple offers on the good product, and offer dates they have been back for a while now, but they're back.
Everything has an offer date. However, some people are trying the offer date and they're not getting it. So today I had an offer put in on a house listed at $699. There's 5 offers. We were at $750. Okay. Not bad. So he called me back and he said, hey, we didn't get what we were looking for, so we're not taking any. And I'm like, okay, buddy.
It just backfires.
So now he's going to list at 800. I think you need to have a good listing to do that strategy, because there's also one on my street doing an offer presentation tonight. I saw 2 offers go on it. So
it's not a lot.
Buyers are still being picky.
Yeah. It's still not. I mean, the offer date thing I hate. It's just such a gamble, but not especially, but like, during the COVID days, it was easy because it was just bananas, but now it's a little bit harder. So I think it's, I don't love the strategy, but sometimes it works, sometimes it doesn't.
I think if I'm working in the best interest for my seller, I'll be honest with you, I'm doing it right now.
You're doing it. Yeah.
But I'm also,
depends on the property.
My listing is going to look elite.
Yeah.
Because there's people that are trying it where it's like,
why are you doing it?
Yeah.
You didn't even stage this home. It looks terrible and you're going to hold offers.
Right.
Yeah.
But in my seller's best interest in a market like this where there's low inventory, you do it. So, and it's unfortunate for buyers too on the other side, but that's why, again, back to your realtor needs to really understand the value of the home and it's not just overpaying like last year. Yeah.
Even if a client, I know their budget's 500 and they're sending me something for it's listed at 500. I'm taking them down the journey of, hey, here's 3 other ones that sold in the street for 650, 675. Like, I'll be happy to show you, but it's probably not going to happen.
Yeah.
So.
Or it just won't happen.
Yeah. It's probably, you're just a bidding war at this point. So most people get it though. Most people are like, oh, okay, I know, I see the value, their neighbor Johnny got way more money down the road. There's no way they're going to take 500.
And so buyers hate sellers right now. Right?
Yeah.
And it's
for a long time, they've hated sellers because sellers have had the upper hand.
I know. But then in like December, January, February, buyers are like, nope.
Yeah.
I have too much choice.
Yeah. That was a slow
any-
market. That was a slow
so
market. How fast it turned around is kind of scary, but it was slow.
So funny.
Yeah.
I think that I predicted a busy spring market and you predicted we're going to decline a little bit more just to
add salt in the wound. I didn't know the banks are going to artificially inflate the market by extending everyone's amortization.
Yeah. But again, you can't go get a renewal at a 35-year amortization. Like if they're helping people and it's a quick relief, okay, it's not going to be a thing.
Won't be forever.
And back to, you have to refinance to re-amortize. You don't just get a re-amortize if the value's down. So those people are still in the weeds.
Yeah.
We might see a little bit of those.
Yeah. We'll see where this market goes. It's going to be an exciting summer.
I'm nervous.
We always are. Anyways, you got anything else?
No.
All right, cool. Well, thanks so much for watching. If you're on YouTube, please like and subscribe. Here's
keep roasting Cortez.
Keep roasting me on TikTok and Instagram. But if you do want short clips, we're actually like all of our videos are just like, I guess blowing up for us because we're not famous, but like they're getting some really good traction on there. So follow us there for more. And yeah, if you have any comments or anything like that, or if you're on Spotify or Apple Music, please consider leaving a review. Thanks so much for watching. I guess we'll see everyone next week.
Thank you.
Bye.